Hey guys, and welcome back to the channel. This is Miles from Swiss Crypto Podcast, and in this episode I'm gonna talk about another very big Swiss bank called Credit Suisse, and it stands on cryptocurrency and blockchain. So stay tuned and let's get into it. So in a previous episode I made a podcast about the big bank UBS, and it stands on cryptocurrency, where they wrote a paper or a news article about their stance on cryptocurrency, and that their stance is more or less negative at the moment. And I wanted to take a look also at other banks from Switzerland and also other big banks around the world. And this time we're gonna have a look at Credit Suisse, one of the other big banks in Switzerland, and it stands on cryptocurrency. And I believe this is a very important topic, since our whole monetary system is based on banks at the moment, is very centralized at the moment. And I'm pretty sure that cryptocurrency has to go through these institutions and also get adopted by these institutions to also get adopted by the everyday man. And if you've listened to the podcast about UBS's stance on cryptocurrency, you probably think now that the future doesn't look very bright for cryptocurrencies and banks. But that's actually not really the case if you look at Credit Suisse. Credit Suisse has been involved in cryptocurrency and also the technology behind it, blockchain, since several years. And they've even employed a head of blockchain and cryptocurrency strategy that is working on projects with blockchain and cryptocurrency, and is also testing different variants of investment types with cryptocurrency and blockchain. And to show you that Credit Suisse really was at the forefront of cryptocurrency and banks, if you want to say so, I want to show you when they really started with cryptocurrencies, and that was already back in 2015. So Credit Suisse is testing projects, cryptocurrency projects, and also blockchain projects since 2015, and they also did quite a big conference on cryptocurrencies in 2017, despite the fact that the CEO of Credit Suisse was speaking rather negatively about cryptocurrency. So even though the head of Credit Suisse isn't that positive on crypto, they are still following the trend and make sure that they don't miss the opportunity to get into the technology and also get into cryptocurrency. And as part of that, Credit Suisse also has a part of their website dedicated to blockchain. If you want to check that out, go to credit-suisse.com and go to the news and insights page, where you'll find different articles about cryptocurrencies and also blockchain. And for a bank to have such a part of their official website just shows their interest into the technology, in my opinion. And I wanted to bring one article a bit closer to you guys, written by Professor Fabian Scher, which is the Managing Director and Professor at the Center for Innovative Finance, CIF, of the University of Basel. So Credit Suisse allows different writers, journalists, and also researchers and professors to write and publish on their news and insights page about blockchain. To show you the connection that Credit Suisse has with the CIF, the Center for Innovative Finance, they say the Center for Innovative Finance, CIF, at the University of Basel is investigating how these technologies are affecting business and society. The research unit is supported by Credit Suisse Asset Management, which has endowed a professorship in distributed ledger technology, blockchain/fintech. So you'll see also research is sponsored and supported by Credit Suisse, a very, very big bank. So let's have a closer look at the article that was published on 19th of September 2019. Professor Scher starts his article by mentioning his opinion on the centralized banking network at the moment and the centralized databases and how cash transactions work at the moment. And to this he says, at this point I should stress that centralized databases are highly efficient. As things stand, there is no truly decentralized system that can deliver comparable speed or efficiency. However, the very efficiency of decentralized systems depends on a huge level of trust. If someone has exclusive control of database and the power to make decisions affecting its current status, they have to be trustworthy. Otherwise, major problems may arise. If someone controls the database, this person could, in theory, seize credit balances, censor transactions, or completely exclude specific persons. Happily, in Switzerland, scenarios like this are not an issue and seem far-fetched, but we should be aware that such incidents are not without historical precedent in some places. Now, to give a few opinions on these statements from the end to the start, very first one, scenarios like these, that banks seized transactions and seized whole banking accounts, really did happen. It actually happened some years ago in Europe, in Greece, where the banks just stopped every transaction and took some part of the investments and money that people put into the bank, cut it off to pay their bills and stuff. So the banks were fine again after that, and people were left with less than they put in. So that problem really does exist, and it's a very fair point by Professor Scher. Second statement, if someone has exclusive control of the database, they have to be trustworthy. That's 100% true. At the moment, the financial system works with central financial agencies that control everything, that print the money, and that you have to take as trustworthy if you want to or not. So Professor Scher here talks about an issue that really affects most of the people. They don't have a decision to make when it comes to trusting banks or trusting central banks. And that's also one of the main points why blockchain and cryptocurrency came into the game, to make transactions with people that you don't have to trust, because no trust is needed in the system. He will talk about this a bit later, but that's a very fair and important point. And I'm actually a bit surprised that he's allowed to publish and write something like this, and publish it on a bank site. I'm pretty happy that he can and that we have the ability to do that in Switzerland. I think that's very important here. To the first argument that he gives, that centralized databases are highly efficient, that's true. We'll see how efficient we can make decentralized databases. I think that's just a matter of time. Centralized databases went a long way in the past until now, how they evolved. So decentralized databases will, in my opinion, most probably also be as efficient as centralized databases in the future. The next paragraph is titled "Great Power Comes with Great Responsibility." And here's what he's saying. The autonomy that people get by using cryptocurrency also entails great responsibility. If someone's private key is lost or falls into the hand of a third party, the crypto asset will be irrevocably lost. As a result, many people decide to store their crypto assets with providers of custody services, contradicting the spirit of public blockchains in general. The fact that blockchain gives holders of crypto assets a choice is undoubtedly positive. They are free to choose whether to make use of these custodial services or hold the crypto assets themselves. These virtual units of value have therefore broken new ground. As a result, this technology may be useful in the specific context of the debate over the systemic importance of individual corporations. Yeah, fair point. If you've been in the cryptocurrency space for some time, you'll probably realized that a lot of people don't dare to store their private key by themselves and buy cold wallets like Ledger or Trezor, or they want to store their cryptocurrency with custody services. And that really is just going back to banking, if you want to say so. Those are just the new banks for cryptocurrencies. That's a fair point that he's making, yeah. Next paragraph is called Blockchain the Investor Perspective. And Fabian Scher is writing, blockchain can also be used for other purposes. For example, companies can issue tokens, units of crypto assets that represent securities. Just imagine you hold your securities yourself in your personal crypto wallet. Dividends and interest payments are distributed automatically. As far as trading is concerned, you can choose from a large number of exchange platforms, some of which are themselves completely decentralized and based on autonomous smart contracts. Any voting rights are linked to the token and can be exercised quickly and securely, of course, using an electronic signature. Unlike cryptocurrencies, these tokens are subject to issuer risk. Nonetheless, these crypto assets can also benefit greatly from decentralization when it comes to transfers and custody. From an economic perspective, the option of decentralized autonomous management is very welcome and makes systems more robust. And he concludes his paper by saying, at the same time, the effect that blockchain can have on the areas in which it can be deployed successfully is being significantly underestimated. So in this paragraph, I'm 100% with Fabian Scher. He does highlight some very important and really good points on how blockchain can be implemented in the future into the financial system, and how also cryptocurrencies and tokens can be implemented in that. That's a very interesting component, and I do believe that that's a very bullish sign for cryptocurrencies and blockchain. Now, to finish things up, there are some more articles on the News and Insights site for blockchain on the Credit Suisse official page. If you are interested in them, please go check them out. They are very interesting and give you a very good insight on what the bank is publishing and what they are most probably focusing on when it comes to cryptocurrency and blockchain. I will do some other episodes, probably with some other articles. Until then, that's been it for this episode. I hope you enjoyed the content I brought to you. If you like the content, give it a thumbs up, subscribe to the channel, that would mean a lot to me, and I'll see you in the next one.